Okay, so you're ready to jump into Bitcoin, but maybe not like swim through all the technical stuff,
Yeah, I get that.
which is exactly why we're here. In this deep dive, we're going to try to break down this whole Bitcoin supercycle thing,
Right.
a theory that's making a lot of noise,
Yeah,
maybe making some people a lot of money.
maybe.
We'll unpack the how, the why, and what it all could mean, even if you aren't, about to buy a Tesla with crypto.
What's really got people's attention is this idea that Bitcoin could be more than just a fad. You know,
Right.
It's not just going to disappear.
It's not just a passing thing.
This supercycle theory suggests it could be a fundamental shift in how the market actually works.
Okay, so we're working from an article all about the supercycle, and it's pretty interesting, I gotta say.
Mhm.
But before we get into the weeds, let's make sure we're all on the same page. Bitcoin, it's had its good times and bad times.
Put it lightly. Understanding Bitcoin's volatility is really key here. It doesn't behave like a traditional stock. It's much more like, think of it like a speedboat, capable of really sudden and dramatic moves.
Okay.
That's part of what makes this supercycle idea so interesting. It suggests that these price swings aren't random, they're actually part of a much bigger pattern.
So instead of like just going up and down randomly, this theory says there's a method to the madness.
Potentially.
All right, I'm intrigued. Walk me through it. What exactly is this supercycle?
So the supercycle theory, it argues that Bitcoin's price isn't just going up over the long term, but it's doing so in this kind of predictable cycle.
Okay.
Booms and busts.
Oh, okay.
And these aren't your average, market hiccups.
Right.
We're talking potentially reaching $250,000 or more per Bitcoin by 2028, according to the article that we looked at.
Wow, 2028, that's not that far away. What's driving this potential rocket ship ride?
One word, ETFs.
ETFs?
Exchange-traded funds.
Yeah.
They've been around for a while with stocks, but now they're in the Bitcoin world, and that's a total game changer.
Okay, ETFs, those are for like serious investors, right? Not just someone with like $50 to throw around.
Exactly. We're talking about institutional investors.
Okay.
Think like pension funds, hedge funds, the big leagues, really deep pockets.
Yeah.
Before Bitcoin ETFs, these players, they mostly stayed away.
Right.
And it's not hard to see why.
I mean, riding the Bitcoin roller coaster is probably not like part of their retirement plan.
Right.
Way too much risk.
Exactly. But ETFs offer this, level of regulation, security, that familiarity that these institutions are used to.
Okay.
It's almost like a bridge has been built connecting their world of traditional finance to this exciting but volatile world of crypto.
Okay, and I'm guessing that bridge means more money flowing into Bitcoin and potentially driving that price up even further.
Good.
But this is where I always get a little lost. Like, how does this impact someone like me or anyone listening who isn't some big-time investor?
That's a really good question, and it gets to why this whole supercycle theory is so fascinating.
Yeah.
Because even if you personally never buy a single Bitcoin, this shift could impact, like, the entire financial system.
All right, that is something I need to understand better. What kind of impact are we talking here?
Okay, well, think about it this way. If all these institutions are suddenly, like, betting big on Bitcoin, it legitimizes it.
Okay.
It's suddenly an asset class. It's not just tech people and early adopters anymore.
Right.
It's part of the mainstream financial conversation.
So more people talking about it, more companies accepting it, like that kind of thing.
Yeah, exactly. And as more money flows in, even indirectly through these ETFs and institutions, it just creates this bigger market, more stability, and potentially even more innovation in the crypto space in general.
It's like, you know what they say, a rising tide lifts all boats?
Yeah.
Except in this case, the tide is all this institutional money.
Right.
And the boats are everything from Bitcoin itself to these other crypto projects to even just how we think about money.
That's a great analogy.
Right.
And it really highlights why this whole supercycle idea is so captivating. It's not just about how much Bitcoin is worth.
Right.
It's about a potential, like, fundamental change in finance.
Okay, I'm convinced this I is a big deal. But let's go back to those institutional investors for a sec. They're all about managing risk, right? What makes them so confident to put their money in Bitcoin even with these ETFs?
Well, that's where cross-collateralization comes in.
Cross-collateralization.
Basically, it lets these big players use their traditional assets like gold or bonds as collateral when they're trading Bitcoin.
So it's like a safety net and play in the crypto world without risking it all.
Exactly. It minimizes their exposure to Bitcoin's volatility, so it's a much more appealing investment all of a sudden.
Right.
But it's not just about managing risk either.
Okay.
There's also this increasing regulation of the crypto space happening. Remember when Bitcoin was like the Wild West.
Oh, yeah, I remember those days. A little too wild for me.
Right. But with these ETFs and with all these big institutions getting involved, we've seen a lot more scrutiny from regulators,
Makes sense.
like the SEC. And that's actually a good thing for Bitcoin long term.
So more regulation equals more legitimacy for those big institutions?
Yeah, basically. It creates like a level of transparency,
Okay.
accountability that makes those big investors feel more comfortable, you know?
Right, right. So it's like building a more stable base for everything.
Exactly.
So we've got this kind of perfect storm brewing here. You've got Bitcoin going up and down like crazy, potentially leading to huge gains.
Right.
You've got ETFs opening the door for all this institutional money to come in.
Yeah.
You've got that cross-collateralization thing to minimize risk, and more regulation to make it all seem more official. It's a lot to wrap your head around.
It really is. And the big question is, what does it all mean for like the average person?
Right, because not everyone has millions of dollars lying around to buy a Bitcoin, but it seems like this whole super cycle idea could affect a lot more than just the price of Bitcoin.
For sure. It makes you wonder about the future of money, how we invest our money, how we even think about value in a world with all these digital assets.
Yeah.
The article we looked at focused on one way this could all play out.
Okay.
But it's important to remember that there are a lot of different opinions out there.
So no easy answers, just a lot of potential and a future that's up in the air.
Exactly.
That's both exciting and kind of scary.
I agree. But like they say, knowledge is power.
Right.
The more you understand these forces at play, the better you can navigate this new financial landscape.
Absolutely. Well, we've covered a lot of ground today.
We have.
From how unpredictable Bitcoin is to this idea of a super cycle.
Right.
Driven by institutions and all this new regulation. But as always, we encourage you to do your own research.
Absolutely.
What are your thoughts? What questions do you have about the future of money or technology? Or even just your own finances? This super cycle theory is just one prediction.
Right.
But the conversations starts about the future of money. Those are conversations we can all be a part of. Keep learning, keep asking questions, and we'll catch you in our next deep dive.